What's up, you guys? It's Andy Choi here, the real estate ninja. Hiya! And I'm gonna go over today on how to manage your taxes in your real estate investments so you can make more profit and income for yourself. The goal of this video is to explain what happens when you purchase or sell your real estate property and how you can pay the least amount of taxes or any at all. This is a really important thing, and some of my experiences, guys, you don't want to be hit with a fat tax bill later at the end of the year from IRS. No. So this is a very important thing to do this now before you start and structure your deal correctly. There were cases on my past projects where I was able to save $50,000 on one property on taxes because we did the right thing, okay? So you don't want to wait for the last minute. This is something you want to educate and equip yourself. The thing about the law is you can't break it because that's illegal. But the more you know, the more gray line you can walk on. Before I get into the next few steps about these tax hacks, go ahead and hit that notification button and the like button. It's gonna help the YouTube algorithm and all this and stuff. All right, guys, before I get into this, I wanna talk about something very important. There's a difference that you need to know about short-term investing into real estate and long-term investing. So first of all, what is short-term investing in real estate? Short-term investing in real estate is if you do any transactions, buy and sell or whatever, within 1 year. That's 365 days. So anything under 1 year, that's short-term investing. And why that's important is because you're gonna pay more capital gains tax. That means you're gonna get hit with additional taxes for short-term investing. Now, anything more than 1 day after a year, so that's 366 days and more, 1 day more, then that you're not gonna get hit with that short-term tax gains. Okay, guys, so that's different. And then you might be wondering, okay, then what should I do? I can't tell you really exactly what is going to be right and wrong. I personally do short-term investment because the numbers make sense. It takes me 3 months to buy and fix it and 1 month to sell it. Then we make like 50,000 on top. So that's worth it for us. But I know people, they just hold on to the property and they're just absorbing all that depreciation. So depending on your investment strategy, you're gonna either do an active, we call it in the real estate business, we call it active investing. So that's everything very immediate. Think of it, active, right? I'm gonna be very active. Or something that's gonna be more passive, right, guys? So you gotta look at those two different things before you get started into real estate. The first thing I wanna talk to you about with you guys is depreciation. And what is depreciation? So if I buy a piece of property, right, then I can depreciate the value of that because over time it's gonna deteriorate and it's gonna lose its value, right, guys? So I can depreciate the value of that over the course of 27 and a half years, to be specific. Okay, so if I buy a house for $1 million, okay, I cannot depreciate the whole million. Only 80% of that is the house value, the property, and 20% is the land value. So I could appreciate 800,000 over the course of 27 and a half years. And so then you divide that 800,000 divided by 27 and a half years, and every year is how much I can depreciate on my taxes. So that's a huge saving. That's a few $1,000 savings. Real quick, what is cost segregation? So if you're doing multifamily, you got 200 units, 50 units, something really of a bigger scale, cost segregation is literally taking like line by line, like for example, the roof, right? The floors, and you're like depreciating individually each part of your building over the course of time. And by doing this, you're gonna be able to increase 7% of your depreciation. So you're gonna be able to get 7% back more onto your credit. So that's a very important tool. This is most likely for someone that's gonna be buying and holding real estate. Cost segregation and depreciation really only applies if you're renting it out and holding on to the property. So if you're fixing and flipping, you can't really apply depreciation because it's such a short time, okay? But remember, everything you own, if you're a business, can be depreciated. Even your car, your camera, your computer. You can depreciate anything that's tangible, okay? Not just real estate, but everything and anything that's tangible. So go ahead and talk to a CPA or a tax strategist, but definitely check with somebody in your local area about what can be depreciated. The next thing that I want to go over is 1031 exchange. You might have heard this number before. It's not a snowboarding trick. But it's actually a tool where you pay no taxes when you buy and sell real estate. What? I'm serious, 0 taxes. What do I mean by that? So if you buy a property and then if you're gonna sell it, you have to pay taxes on the profit. So instead of doing that, the government, we love America, created this program called 1031. So you buy the property, and when you sell it, you do a 1031 exchange. So you tell your agent, your escrow company, hey, I want to do 1031 exchange. What that means is you're gonna buy another property like for like. So if it's a single family home, you're gonna buy another single family home. If it's a duplex, you're gonna find another duplex, okay? Like for like. When you do that, you're gonna transfer all your funds to that property and therefore you pay no taxes. But whenever in the future, if you ever really decide to sell and cash out, you'll have to pay all the taxes. So most people that utilize this strategy, they buy and sell and keep doing 1031, but they never really cash out and they kick that can to the curb, to the end of the earth. Right? Their kids will absorb it at that point, but the kids will keep doing the 1031. So that's a great way for you to not pay taxes and buying and selling real estate by doing 1031. It's pretty much deferring your taxes in a long story short. The next thing I want to talk about is classifying your expenses. Right? What do I mean by this? You want to like have some sort of software like QuickBooks or Excel. Like, where is your money going to? Did you guys really think about this? I know it's like you're living life and things go very fast, but really look at your credit card statements, your bank statement, and categorize those, because that could be tax write-off. Promotions, if you're giving out gifts to your vendors, or you're driving to see properties, right? Or you're knocking on dollars, or you're mailing, doing any mailers or marketing, right? All of this is tax write-off, guys. But if you don't categorize it and you don't have it organized, then you cannot write it off. You have to have it organized. The next thing I want to talk to you guys about is the best thing I think that ever invented, other than peanut butter and jelly sandwich. But the next best thing is actually refinancing your house. Let's say you bought a property, you put a 20% down payment, and then you're living in here, and then you're paying off the loan, and it's also appreciating in value. Great, you're like, awesome. Now, here's a ninja move. All the equity that you have, you can meaning all the money, when I say equity, it means all the money you have in your property. You can refinance your loan with Bank of America, Chase, any major banks, right, that's in your area. And you can go there and be like, hey, I have this property on 123 Main Street and I want to refinance my house. So what that means is they're gonna send an appraisal, they're gonna evaluate how much your house is worth, and they're gonna say, if your house is worth more than when you bought it for, there's a difference, right? Then you can pull out the money you have there and your payments will still be the same. Remember to negotiate a good interest rate. So maybe you might go bank to bank, hey, Chase gave me 4%, how much can you do, right? So it's all about negotiation, guys, okay? Just don't accept whatever cards you were dealt with, right? You're destined for your own future. So you're gonna get a refinance, and the beautiful thing about refinancing, the money you take out, you don't pay any and 0 taxes, guys. So that's a beautiful vehicle for you to buy a property, let it build up. Maybe it's a rental property, maybe it's a duplex, right? Maybe it's an apartment building. Whatever you buy and it appreciates in value, it grows. Maybe you did a little remodeling there and created value, or maybe that area is just hot and it's just growing 10% a year in appraisal, like it's just growing in value. That's something really good. So don't wait on that. When it gets to a certain moment, refinance, cash out. Why? Then you can go and you can go buy another property and do it again and collect more rent, guys. So that's a beautiful tool that we love to use all the time and every time. And there's so many ways. I just scratched the surface, guys. There's so much detail, guys. So I might have missed something or whatever. Drop a comment below, whatnot, and then let me know what are your favorite tax strategies that you guys have in business or real estate. And then if there's anything you want me to talk about more specifically, feel free to leave a comment below, guys. Finally, just go ahead and talk to a CPA, a certified public accountant or a tax strategist. They'll usually have like a free consulting, like a first 30-minute free consulting, because they want to earn your business, right? So then they're gonna be happy to educate you. Talk to a tax strategist and ask them, do they do real estate tax? Because that's very specific to this industry, and there's more items you can defer and put aside than anything else. Okay guys, that's the end of this video on how to hack your real estate taxes and a little bit more. And if you really liked what you guys saw today, do me a favor, hit that like button, that thumbs up button. Just do it right now. You would have already done it by now. It's gonna help the YouTube algorithm. And go ahead and subscribe and hit that notification. And until the next time, over and out.